Today we're going to talk about looking at weekly trends. We're going to look at some of the US dollar majors and the British pound crosses. We're going to show examples of each of these that have played out this week, how to identify our directional bias, and we'll talk about the great debate. Stay tuned, traders. We'll be right back.
G'day traders, Stacey, Burke. Just continuing our discussion. Just a reminder, tomorrow night, the great debate, how to trade the rest of 2020. We're going to have some awesome traders on there tomorrow. I think it's going to be just a really great night to enjoy yourself, hear about markets from different perspectives, from different traders. Again, Anthony Crudelli and Ryan Paisley, Adam Webb and Nicholas Boval, Ralph Schlotman and Blake Morrow. I think it's going to be just a fantastic opportunity for traders to just, again, learn from other traders, and I'll include the link below. First round is going to be Adam Webb versus Nicholas Boval. Hopefully I'm pronouncing that right. And then Ralph Schlotman against Blake Morrow, just discussing their different perspectives on the markets, and of course Anthony Crudelli and Ryan Paisley.
I think that tomorrow night's going to be an absolutely fantastic night. Those are 6 of the brightest minds in trading. I think those guys have probably forgotten more about trading than I've ever learned about the market. So I'm looking forward to being a sponge tomorrow night. I know I'm going to pick up a gold nugget from probably every single one of those guys. Whenever you get a chance to listen to traders talk from different perspectives about how they trade global markets, especially in a power-packed night like that, I think it's just a great opportunity to soak up as much information as we can to keep getting better. Today we're going to go over some of the major areas of liquidity, high and low of the week, and looking at the different scenarios that play out as the week plays from Monday, Tuesday, setting our initial range. We talked about this a bit last week, but it's a powerful way to identify our directional bias each day and be aware of when the stop hunts are occurring, where we want to position ourselves if the market is either in a breakout and a trend, a false break reversal, or just in a trading range. So we've seen examples of all 3 of these in some textbook perfect situations. We're going to review each one of these, but just to review, the market will open on a Monday. It might open up inside of Friday's range, and obviously we base our trading on Monday from how Friday may have traded. But when Monday trades, once Monday has set its range and we're into Tuesday, we now have a high and a low of the week. Now, as Tuesday begins to trade, we may extend that range out and make higher highs or lower lows, or the market may reverse and take out Monday's low or take out Monday's high and then consolidate. And we have our initial range. Just like when Asia sets up for the day, in most days we get a high and a low for the session. As we head into the Europe session, we now have reference points for trading off of the high and the low. What's important about this is that it then allows us to start to identify what type of scenario we're working in. The market may work into the low for a squeeze and a break back through the highs and towards the top of the range, and that may actually be a breakout trade as we saw this week on a couple of the pairs. Let's look at an example of that right now.
So we're looking at the pound Canadian and looking at the previous Thursday's high and the Friday session as it went sideways and formed a smaller rectangle as we headed into Monday. And we'll just expand this box out a bit. But as the week traded and we headed into Monday, we had the high of Friday, and Monday took out the high of Friday. So we made new highs. We now have a high of the week, but also have a breakout pullback, and we have a low of the week. And the high of Thursday is a reference point because we're back inside of Friday's range, but this is a peak formation low, and Thursday is our peak formation high. The market pulled back inside on the Monday and started to trade into its peak formation low. So we have Monday trading into Friday's peak formation low, and then Monday trading down into its peak formation low. As we head into Tuesday, again, just an example. I'll just move this over. Oops. An example of where when we go into a session where we've already taken out Friday's high, we have a peak formation up top from Thursday, and the market is inside of Monday's range. It moves towards the high of the week, initially triggering stops and getting traders to short the market. At the low of the day, the redrawn low of the day, it hits the stops on the Asian session, gives us an engulfment and a pin hammer in line with the original break long. We have a larger structure now. We have a target from Thursday's high, but we also have a measured move of Monday, Tuesday's range if this market was to break out. So we have two inflection points. We have the high of the Europe sell-off, and we have the low of the engulfment pin hammer at the low of the day, in line with our thesis that we could be heading back towards the top anchor point. We've traded inside of the peak formations without taking them out. We've made new highs. We've hit the high. We've had a 1, 2, 3 down towards the low of the day with a pin hammer engulfment. And the market does a measured move 2 times the expanded range. It breaks through the high of Thursday, but an example again of breakout, pullback, consolidation, and continue the move. So in terms of aligning ourselves with the trade, you can see where market makers, the smart money, will entice traders into, number one, they've shorted it early, they hit the stops. They shorted again, and if this was your reference point for the measured move down, if you were selling it with the expectation that the market would move towards Monday's low, when you had the engulfment pin hammer, you would be looking at the opposite as a reversal trade. So this is a trade signal going the other way, which is an example of where the market has enticed traders into counter-trending the move, flip the book, pins on the bottom for the original move of the breakout from Monday and an expanded trading range. Breakout, pullback, trend. Very strong trend, explosive move, and 2 times the measured distance of the initial balance.
Okay, so this is why it's important to be, as the range expands, to be able to develop our thesis for some ideal trade setups. I have some my buy low setups, my sell high setups, and again, each day, if I have a directional bias, I can then map out a trade plan for each of those pairs, and depending on how it sets up and trades as the market begins to trade in London, it will either maybe give me an opportunity in the London session, or if I am patient and I wait, as that range gives a clearer picture, we may get an ideal setup in the US session. Next, we have the breakout false break reversal. We saw a couple of great examples of that this week as well, and we'll look at that right now too.
This is a great example of, again, the initial balance where we have the low of Monday and the high of Monday as Tuesday begins trading. So we've got our initial high of the week and low of the week. And the market, right in the Asian session, comes in that first hour, 1, 2, 3, and then an engulfment on the 4th candle. Now, I just want you to think about this as well in terms of looking at the structure. We have a middle structure in place for our high of the day. We have a breakout in that first hour and an engulfment at the end of the hour. If we consolidated that candle into a 1-hour candle, this would be a pin bar. And we'll just zoom in on that to show what that looks like. We would have a pin on the bottom, a breakout pullback for a false break pullback. So when we look at this, when we bring this back in here, when we look at this, the timings, 1, 2, 3, engulfment, but then at the beginning of the next hour, we have the pin hammer. At the bottom of the week, after a breakout pullback reversal, we have geometry, and the thesis is this: the market will trade back to the high and either break through or consolidate and pull back for a consolidation or a pullback reversal. The market breaks through, pulls back and continues the move, breaks through the high and goes sideways on top of it. And what's important again about that is that the market now is in a trend. We have our upper reference point, we have our breakout pullback reversal. So we have a target for this market to move towards to continue the move. False break reversal. And then, of course, we have larger geometry if this market is to expand the box, the bigger box. And this is a great example of the initial balance for the false break reversal off the low of the week, not only breaking out of the middle structure for the measured move, but breaking through the upper structure and continuing the trend. And that market, as the week traded, ended up hitting its full expansion of that measured move into the upper box.
So as you can see, when you have a peak formation in place on one side and one on the other, and you have a market that gives us that false break reversal in those ideal setups, you can have some explosive moves in that larger range for some significant asymmetrical risk-reward opportunities, but also the follow-through trades as the market continues to work the highs or lows, hitting stops, expanding the range, and continuing the moves. Our next scenario is a breakout pullback and trading range, which we see this occasionally on all pairs. Will go through some phase or week where we have essentially a consolidated or a range-bound market for the entire week. We'll look at some of those right now.
Another example of the British pound. So we can have Thursday's high again, Friday's low, Monday breaks through Friday's high. And again, we're just looking at the initial balance and having a bias for your trend. Somebody asked how I determine trend. So the market breaks out on Monday and then continues the move in the U.S. session. The market sold on top of the box from Friday's high. We now have a new high of the week and we have a low of the week for all intensive purposes. And we have our lows from the London session. The market on Tuesday now, initial Asian range 123 stop hunt to the high, not quite all the way to the high, but obviously short into people who have shorted the market before putting in a peak formation and pulling back and then hitting stops again just prior to our Europe-London window in the gap time. The market sells down into the low of the previous day, London session, as well as now the current day. So breaks out, hits the stops, pulls back, hits them again, goes into consolidation sideways, and we get an engulfment pin hammer, essentially at the low of the day for Monday. This initial candle action in the gap time on the rollover, obviously the market has made a new low and the market has hit the stops and it's respecting that as the low in this gap time. Assumably the market makers, the smart money, have cleaned out the board from Friday's longs, pinned down, got any traders who were possibly still in the money. We have a middle structure. So again, this is our inflection point for a measured move for the initial trade. So if the market had just come down, traders who get in down here, your inflection point is this upper structure for the initial pullback. But when we have the London session now open and we have a consolidation at the low of the day, so again, you notice the trades are at the low. The trades are at the low. They're not pulling away and making you get filled somewhere in the middle of the 25 pip box. The market hits the low and goes into consolidation. Gives a pin hammer at the low of the day. So we have 2 points we can measure now for our measured move target. And we have an inflection point that expands out, but we also have the high of the Monday, Tuesday initial range. And we can see that that full expansion was hit. And again, an example of, to some degree, false break reversal, but also just breakout, pullback, continuation, fill more orders. An example of the trading range where the market hits the stops, pulls back, and goes into a trading range for the better part of 3 sessions before again breaking out, pulling back, hitting the stops a second time, going into consolidation. So this Monday, Tuesday initial balance helps us have a bias as we head into the rest of our sessions. Again, you're going to have situations where you're looking for possibly a buy low setup. The market gives you a sell high setup, but it goes through the low of the day, stop hunting traders who were through the last breakout of the high. So they've come down, 30, 40 pips, but they give us a buy low setup. Again, our bias is that there's money at the top of the week. We're in a breakout in a market that's making new highs. This trading range inside is inside. We're inside of the box. So effectively, this is an inside day until it takes out one extreme or the other. In this instance, we've had a breakout, a stop hunt, an engulfment, but more importantly, not to say that you would take this trade, even though this is a great opportunity, but when we get to the U.S. session, again, the market has pulled back inside. So if we were to draw this as our box, because that was the last swing low after the high of the day was put in place. And again, I want to reinforce that if you picture these 4 candles in the first hour of the U.S. session, we're back inside. Then we get a 1, 2, 3 down, stop hunting traders who are long. And then the 4th candle is a bull candle inside bar. These 4 candles, as an hourly candle, form a bear candle with a pin on the bottom. This bull candle makes this into a pin. Then the next hour opens up as a little bull candle and it breaks above the numbers. Again, now we have a pin hammer combination for the continuation and the measured move. Stop hunt low, trend the market back in line with the original move from Tuesday. Breakout, pullback, stop hunt, continuation. And again, similar level 3. So we get into level 3 and the market takes traders up with the trend. Stop hunts 1, 2, 3 into the trend before continuing the move, hitting it again. 1, 2, 3 down and continuing the move again the 3rd time in the U.S. session. The pin hammer confirms the engulfment. Just raise that up a bit. Confirms the engulfment. And again, just 1, 2, 3, 4, 1, 2, 3, 4. First candle of the 3rd hour engulfs the highest bull candle on the 3rd push to the high. At the high of the week, we have a middle structure for a measured move. And we can project that down to see where that might take us. The market has almost made a full expansion to that second full expansion as this session is just starting in the Europe-London window. But again, breakout, pullback, continuation. Our original breakout on Monday, Tuesday was long, and the market again continued with a stop hunt low, pullback. So again, traders might felt that this was going to continue down. They didn't hit this trade, but then the market pulled back inside and stop hunted into the move, pulled back, bullpen, breakout candle in that 2nd hour of the equities open in New York for the continuation back through the high of the day. Hopefully you got value from that, traders. Again, the 3 things that markets do. Monday, Tuesday can be a powerful combination for our initial balance, establishing if we're just going to be in a trading range or if we're working one side for the squeeze, or if we get a breakout, pullback, continuation, or a breakout for a trend trade. These are where you get fantastic asymmetrical trade setups.
So this is how I try to position myself each week identifying, I look for the same setups over the course of those pairs, meaning that I have my favorite setups, and depending on how the Monday, Tuesday initially trades, if I can identify those squeezes or those range-bound markets, the 3 lower highs, the different scenarios that set up for big explosive moves, those are the trades that I like to trade in, because I'll be honest, the other stuff that's in the middle is 50-50, and it's hard to trade. It's time-consuming, it's stressful. When you have these opportunities and you've been able to identify the trades that you trade best, or the setups that you trade best, that's where I feel I get the best, fastest trades. There's very little stress, they move strongly, and they continue throughout the session without a lot of pullback into the profits or into the trend. So breakout, pullback, trend, breakout, false break, reversal, breakout, pullback, trading range. Friday, Monday, obviously Monday if it opens up or it continues a move from Thursday, Friday, whatever that may be, but we can establish our anchor points, and then as Monday and Tuesday trade, now we've got our initial balance for the week that the market will either stay inside of, it will work one side and possibly reverse, or it could break out and trend and continue the move for a measured move. So just a reminder, the great debate, don't miss it. I've put a link in the box below. Save your spot. I think it's going to be huge. Try this out yourself. Remember, the market, as it expands, there's liquidity building above and below, and that goes for the intraday cycle as well, and it's all about the money, following the money. Hit the stops, shift the market away. Keep it simple, traders. Again, thank you for all the comments and likes. The last few days have been really crazy. I've had a ton of emails, a ton of comments, and again, just trying to keep working through and getting back to everybody. Keep it simple, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.